Hi, welcome to another video where today we're going to cover the concept of Islamic finance, an introduction and overview behind the principles of Islamic finance. The origins of Islamic finance can be traced back to about 1400 years ago, whereas its recent history can be dated back to the 1970s when Islamic banks in Saudi Arabia and United Arab Emirates were launched. In recent years, around the 1990s, we have Bahrain and Malaysia also emerge as centers of excellence. Currently, it's estimated that around $1 trillion worth of assets are managed under the rules of Islamic finance. Islamic finance rests on the application of Islamic law or Sharia, whose primary sources are the Quran and the sayings and practice of the Prophet Muhammad. Sharia, and very much in the context of Islamic finance, emphasizes justice and partnership. The main principles of Islamic finance are that wealth must be generated from legitimate trade and asset-based investment. The use of money for the purposes of making money is expressly forbidden. Investment should also have a social and ethical benefit to wider society beyond pure return. Risks should be shared between both parties. All harmful activities should be avoided. This includes investments in businesses dealing with alcohol, gambling, drugs, pork, pornography, or anything else that the Sharia considers unlawful or undesirable, which is termed as haram. The main prohibitions behind Islamic finance include the activity of charging and receiving interest, which is called riba. The idea of a lender making a straight interest charge, irrespective of how the underlying assets fare, transgresses the concepts of risk-sharing, partnership, and justice. It represents the money itself being used to make money. It also prohibits investments in companies that have too much borrowing, typically defined as having debt worth more than 33% of the firm's average stock market value over the last 12 months. It also prohibits investments in uncertainty where transactions involve speculation or extreme risk. This is seen as being akin to gambling. This prohibition, for example, would rule out speculating on futures and option markets. Mutual insurance is permitted if it's related to reasonable, unavoidable business risk. It is based upon the principle of shared responsibility for shared financial security, and that members contribute to a mutual fund not for profit, but in case one of the members suffers misfortune. Uncertainty regarding the subject matter and terms of contracts, which includes a prohibition on selling something that one does not own. There are special financial techniques available for contracting to manufacture a product for a customer. This is necessary because the product does not exist and therefore cannot be owned before it is made. A manufacturer can promise to produce a specific product under certain agreed specifications at a determined price and on a fixed date. Specifically, in this case, the risk taken is by a bank which would commission the manufacture and sale of the goods to a customer at a reasonable profit for undertaking this risk. Once again, the bank is exposed to considerable risk. Avoiding contractual risk in this way means that transactions have to be explicitly defined from the outset. Therefore, complex derivative instruments and conventional short sales or sales on margin are prohibited under Islamic finance. As mentioned before, the receipt of interest is not allowed under Sharia. Therefore, when Islamic banks provide finance, they must earn their profits by other means. This can be through a profit share relating to the assets in which the finance is invested, or can be via a fee earned by the bank for services provided. The essential feature of Sharia is that when commercial loans are made, the lender must share in the risk. If this is not so, then any amount received over the principal of the loan will be regarded as interest, which is prohibited in Islam. Thank you for watching today's video, and on the next video we will cover different financial instruments under Islamic finance. Please look forward to the next video, like, subscribe, and leave your comments below discussing the application of Islamic finance. Thank you.